Very well, very well. Very, very well. All right, so welcome everyone. Welcome to this last session of this week. Welcome to the FX3 Tokyo Open Live Room. I'm Giuseppe Basile, also known as the FibStalker, but I promise that I only stalk price. I do not stalk people. And thanks for joining in. I see Roland, Sinatra, Jake, Mr. Carrillo. I hope it's you. You're just not logged in. Hello. FX video, IBY0103. There's Desi there, and I want to thank Desi for her work, daily work in preparing and maintaining this show. Thanks a lot, Desi. Hello, Pantelis, welcome in. So let's wait a couple of minutes. I see other people joining in here. And in the meantime, hello, FX Ambassador. Welcome. Good evening. Good night. And as we wait, let's introduce the Tokyo Open Live Room. This is a daily show that features real trading at the very heart of the Asian session with me, FibStalker, Giuseppe Basile, also known as FibStalker. It's a daily show from Sunday to Thursday. If it's the first time you join in, remember that we will be back on Sundays, and Sundays are very interesting because we do a complete analysis of what can happen in the market. Good morning, Pantelis. Good morning, Jake. Good night, good evening for me. And as you know, I take risk very seriously, and trading is very, very important to me. And by the way, this morning I have actually I given a premium webinar on FX Street. Hello, Will. We're just starting here. We're talking about risk. If you are a premium subscriber of the webinars, by all means. And when I say by no means, by the way, I really mean by all means. So by all means, please review that presentation. I speak about risk, and I also present my FibStalker console, which I only partially presented during the Traders Expo. And by the way, the presentation of the Trader Expo is still online. So if you go on this address here, internet address, it will bring you to the virtual events, and you can register. It's free. You can register and watch not only my presentation but also the presentation of the other speakers. That very, very interesting. I found some of the speech very interesting myself, and so I suggest you review that. So let's talk about it. Trading Forex and its derivatives, futures, options, CFDs, and other instruments with the retail off exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Okay, so please also review the FX risk disclosure on the website. And remember that the information, including commentary and trade ideas I provide in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. I give the idea and the trading and the material for your general information and educational purposes only. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, and you can read the rest of the disclaimer there. As you know, I offer the coaching program, the FibStalker Methods coaching program, a 7 months program which helps you in understanding the mechanics of trading, gives you all my method and timing, and 7 trading systems, allows you even to understand and write your own trading system, and also helps you reach profitability and then consistency. So if you're interested, by all means, get into that. All right, so let's dive into the charts. That's what we are here for, and you should be able to see them already. Give me a yes if you can see them. So let's look and review these charts. There were notable news today, and actually the most important ones was that I was stopped out of this position at break even here, and this market is being pushed lower by this. This is the US dollar Canadian dollar, by the way. So the long case for me is gone, and I would have taken this trade again, and I'm going to talk a little bit about that as well tonight. And what I see here, it's a first target hit. There's going to be a second target hit, and the potential for this market now to continue lower. So the bullish case is gone. Again, I would have traded this again, and I'm glad that I follow my risk management in this trade, and I actually am out at break even here. Okay, there are some notable development in other markets, and as usual, I want to remind you that I like looking and answering your questions. So if you have any questions, please feel free to ask. We are here for a discussion, to extend the discussion. So I have FX Ambassador, Jay, good morning. Pantelis, good morning. Good evening, Will. We have Jake, Roland, Sinatra, IBY. I noticed that traders tend to become more less concerned and more relaxed as we move into the end of the week. But still, there are some opportunities that we have to keep in mind, because they could come on Friday, or they could actually come on Sunday, and we have always to be prepared. Okay. So the euro dollar trade, on the other hand, is working nicely here and pushing higher. So as we say, this market has the possibility to move higher all the way into that 115.75, and there's a lot of room to move. But this market gave a foolish trade here, and is now trading higher. Jake is saying a review of the pound versus the US dollar. We will do that. I just want to mention some of the markets that are following up. There are some markets that did not follow up at all, and I mentioned already US dollar Canadian dollar. Let me remove this level here, because it's not there any longer. And I want to review first, before I get into pound US dollar, I want to review the can you all see the charts? So let me check here. Oh no, you cannot see the charts. You cannot see the live charts. You can see them here. And by the way, welcome. Sorry, I was doing an analysis, but I was showing still the slides. Okay. Yes, just that was just a slide. So let me start again then very quickly. The bullish case for the US dollar Canadian dollar is gone. And as I mentioned, I would have taken this trade again the same way. No promise about that. And And this market is now has the potential. So this bullish case here is gone. The weekly are not defending this level any longer. And so we can see this market sliding lower into 134.29. And in a way, makes it now compatible, fully compatible with the potential move of the euro dollar higher. All right. So we mentioned then the euro dollar. We mentioned that this 50% level that has been trading here has been respected fully, and the market has actually moved higher, and it's moving higher. So expect upward pressure in this market. It's moving very, very nicely. So congrats to all of you took this trade. And before we get into the pound versus US dollar, the US dollar Japanese yen here is trading at 50% level, a potential area of resistance here, which could be the level that will move this market lower. So we need to make sure we keep an eye on this market tonight, because as you can see, this market is moving strongly lower here, and this market has already confirmed on the 1 minute. So we need to be very, very careful here, because this could be another level that I didn't mention yesterday. It could be another level that actually pushes price higher, and the confirmation came on the 30 minutes already here. So this is a potential short here. What I would do, I would potentially, we could see a retrace here in this market. The panic is over. And this market now could come for a little move higher here into this 112, 113 area, and this market could continue from here. So I think we have to be very serious in considering a short, a potential short in this market. And if that's the case, and this market offers us a bounce here into 112, 95, 113, the stop would be above 113.21. So we are talking about 21 pips of risk. But as you can see, this market seems to have a urgency to actually continue continue lower. So it's not actually respecting. It's not that it's not respecting. It's actually there's very, very strong selling in this market. So that's what we are seeing at the moment. Bounce in this market would actually could be an opportunity to short. And this market is going to be very, very fast here, and we don't know whether it's going to offer an opportunity or not. So at this level, it's 87, 21, we are talking about 21 plus 13, 34 pips of risk plus spread, so 36, and just to be on the safe side. So if we get a retrace, we can try to improve the odds there a little bit, and we will see whether that's something that this market will agree to offer or not. But as you can see, I mean, it's moving lower. So this market is selling strong here. So it's now 40 pips or so. So this market could come and retest, but it's very, very weak actually. So what's the possibility for this market? The possibility is is to actually continue lower into that 109 that we mentioned. So it's important to be involved here at these levels because this market is very, very weak, as you can see here, extremely weak. Okay, and so that's an opportunity here. I have entered. I have an entry at 112.86 and a stop above recent highs here. So we'll see whether this market is going to offer a risk-free trade for us. We are 36 pips of risk here, and that's something that we want to look at. Of course, this market will just not continue lower like that, but will actually eventually retrace. But it's very, very weak, as you can see here. All right, so that was interesting here that we had this opportunity, and again, while we're trading short here, this market is trading at 50% level and is finding is being rejected at that level. So if that's the case, this is a continuation short into that 109.90, 109, I would say 110. All right. So we'll see what this market is going to bring to us, and if we continue lower as the US dollar continues higher, obviously that's another reason for building the case here in this trade. That's what we could witness there. All right. So yeah. So hello, Lucas. Hello, everyone. So we started here, and there's also Rudo. Welcome, Rudo. We just considered a short in the US dollar Japanese yen that is pushing lower, and this market gave a confirmation here on the 1 minute and 30 minutes. So that's a good time to get involved. There's a strong daily 50% level short above these prices, and we will see what happens. Okay, so I have my trade in, I have my order in, my order has been filled, I have my stop and first profit, the risk-free trade, the level with the risk-free trade approach. So if you want to know more about it, as I was saying before, you can review today's webinar on FS Street, where I talk about risk parachutes, and I explain a little bit better also the risk-free approach, which is very, very simple. So, and a lot of traders are using that, so it's not a secret really. Should be used more often, I believe. I still don't understand the reason why lots of people don't use it. Now, before we get to pound versus US dollar, there, let's review it now, because if there are opportunities, I just want to make sure that we touch on it. Now, this market, as you will remember, was in a move lower, and I believe we actually traded the first target there. I'm making a new study on improving one of the setups, and so let's get into the pound versus US dollar, as we mentioned. So what we saw in this market, we saw actually this market going to meet 2 days ago now the first target there. There was not yesterday but 2 days ago on the weekly time frame. Okay, and this is a larger target. This is a weekly target. Okay, so no wonder that you see some profit taking there. The reason why the market stopped right there is because there is profit taking happening there. right? So this market also had a first target from an inner move, and we can model this in a number of ways, but basically the results it's basically the same. Okay, now that inner move has not been reached yet, but that's a lower time frame. So the larger time frame here is coming into play before, and that's the reason why I mentioned that as the actual target. Okay, so there's nothing to do in this market. In this market, we have just to wait. We have to wait and see whether the daily will be capable of pushing price into that target, and we'll only see that when this market retraces into 140.58. Okay. Does that answer your question, Jake? I think, sorry, who was asking that? It was Jake, right? Yeah. So pound versus US dollar, it's a weekly target. We are waiting for a retest. That's what I see there. Okay, and it's not convenient really to try to anticipate any shorts or a continuation lower at this stage. Just wait that the market will come back to that level, and so we reviewed 4 markets so far. We reviewed the US dollar, Canadian dollar, the euro dollar, the US dollar, Japanese yen, the pound versus US dollar, which is a weekly targets, and you remember we mentioned those weekly targets in advance as well. 139.53. Okay, that trade is done. I wouldn't try to push this market lower. Okay, we have to be patient and wait that we get the right opportunity. And sometimes we make mistake, but in the majority of the case, if we don't follow the rules, the majority of the case, we will perish. We will not be successful. Okay, so let's keep an eye on the US dollar, Japanese yen here. I have a lot of way to go, 30 pips to go here to get the risk-free trade, but see, this market is broken now, so this market has to retest, I believe, at least the 112 level now, and so this gives us plenty of room for a risk-free trade. Okay, so we took a free trade here during the room. Hope you appreciated that, and we took a short because we believe that this market will actually test the 112 at least. Okay, this market has to go down at least 80 pips at this point. It's not that it has to go down. I mean, the market will not do what I want it to do, of course, right? The market never behave like that, and this market will do whatever it has to do, but I believe that that there is a good possibility for this market to actually test that 112. All right. So we reviewed also the pound versus US dollar. Japanese yen is pushing lower, and we can go back and look at our prediction, if I can use this terminology. Here in the US dollar, in the Australian dollar, Japanese yen, we mentioned that this market is in a long. There is a support below this level, but it's still trapped. I mentioned around February the 16th here that this market was trapped around these 2 levels. So look at this beauty. The long have traded below here on the weekly. The shorts have traded. The long have traded. Sorry, the shorts here have traded twice, here and here, long traded here, short traded here, long traded here, short is trading now. Is this a short? You know I'm biased on the upside in this market. I'll never get this short. Okay, against the trend, I leave that to you. If you wanna take this trade, I wouldn't take this trade. I would never take this trade. All right. Any questions in relation to the pairs that we have reviewed so far? You know, this is still trapped between 80 and 82, and we have a bullish bias on this market. Would you agree that we have a bullish bias in that market? So who has a different view in relation to the Australian dollar Japanese yen? Who believes that this market actually, it's doomed to move lower? Any considerations or opinions there? Is there anyone who has a different view? Anyone wants to share a view on this market? Take your time to write there, because we have a little bit of delay between my voice and the streaming. So let me repeat the question then. The question is, does anyone has a different view on the Australian dollar Japanese yen at this stage? Where do you believe this market is going to go? Write it down if you have any other positions there, or any other ideas. Okay. On the other hand, the euro versus Australian dollar is much weaker here, and we knew this. We knew that this level here was not a level that we anticipated or expected to hold. So this market is moving decisively towards the next 50% level, but and we are not there yet. Unfortunately, didn't offer a good entry short. So I will leave this market alone for now until it gives us a good entry that we can trade. And obviously, the New Zealand dollar US dollar, which is a proof of the 80-20. Yeah, I would define it like that. New Zealand dollar US dollar is the proof of the 80-20 that shows us that 80% of our gains come from the 20% of the trades that we let move. And basically, there is a widely subscribed agreement among professional traders. My my mentor, who has more than 10 years experience, he thought the same. 80-20, 80% of the gains come from the trades that we let go, that we let run, like the New Zealand dollar US dollar here. Jake Bernstein, he thinks the same. And by the way, I suggest you review the presentation his presentation at the Traders Expo as well. Other seasoned traders, and Jake Bernstein, I mean, is 20 years experience. As other seasoned traders like Dave Landry, they all come from. Once you get enough experience, you understand that you have to let the market move. Okay, and the New Zealand dollar here, it's a good example of a market that when you let it move, it can give you 300 pips, can give you a 19 reward to this trade here. Okay. Unfortunately, I'm not in this trade, fortunately, because I was involved in the Traders Expo, in the Traders Expo and preparation for it. But I've recommended this trade well before it happened. Indeed, I showed you the level that was known. How many bars before? It was known 1, 2, 3, 4, 5, 6, 7, 6 bars before, 6 days before. We knew that level, and we knew that we had to time using the FibStalking time in that level as well. So this market is, make no mistake, this market is going to go to 68.45, and it's going to go there fast. It's going to go there probably even tomorrow. but definitely by the beginning of next week. Okay, so in how many days? In less than 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 session. In 2 weeks time you have a 300 pips trade, and that's what you want to do. Please let me know who among you has taken this trade. I know there are a couple of students here. Pantelis, have you taken this trade? Is there anyone else who has taken this long here? I know that there were some people who didn't believe that this market could move higher, but indeed it is, right? I still believe this market could move higher and the euro could move higher, and yet the US dollar, Canadian dollar could move higher, but that didn't happen, not this time at least. Because this market can move all together in the same direction generally, and typically one of the market will do a lateral correction and other markets will move higher. All right, so this is very interesting here. New Zealand dollar, it's actually showing the 80-20. How important is to actually trade and let the market do whatever it has to do. If you were scared that when the market was coming back here, or again coming back here on the 19th and again on the 24th, you would not ever you would never had taking advantage of this large move, and this is what brings the real gains. If you don't take these large moves, you'll make some money, you'll lose some money, you'll make some money, but these are the large moves that actually make really 80%, and that's what's happening to me since the beginning of the year as well. 80% of my gains came from this kind of trades. Okay, so let's look at what's going on here in the US dollar Japanese yen. The US dollar Japanese yen, it's correcting, and now it's I believe possibly continuing lower here. And this market is very likely is going to offer a risk-free trade here. So that's all we need. And Panther is saying, no, G, unfortunately, this week was not that active for me. Okay, because of the internet problems, probably. But okay, I mean, there will be always opportunities. We follow so many markets that opportunities will always be there. So here we get the US dollar Japanese yen starting its move again, and if it breaks lows, it will continue moving strongly lower. It has to break there are two lows to break here: the 30 minutes as well as the previous lows here, 112.74. So if that happens, 112.75 here, or whatever it is, the level 75. So if that happens, you're going to see another long bounce here as this market continues into 111.80, and at that level, we would already have multiples of our risk for this trade. So let's see what happens there. We will keep keeping an eye on this market as we continue here. So New Zealand dollar, it's going to targets. Euro dollar is moving higher. As it moves higher, we'll keep pushing the US dollar Japanese yen lower. And again, this is a trade. Let me make a calculation here. So to me, the target of this trade is going to be 110, and that is it's not a huge trade. I mean, with the risk free, this is going to be let me see. This is going to be almost a 4 reward to risk if we consider risk free, which is a good trade. And I always suggest you use risk free and don't get afraid of using it, but especially the real emotion is not fear, but it's greed. Don't get greedy and try to squeeze, everything. So that's my projection there. 112.80 to 110. It's a pretty good trade. You can see that we have timed that on 30 minutes basically. So we will see whether this market offers a continuation lower here. All right, so I'm not worried of this. I'm not worried of these rallies here. The market has to do whatever it has to do. I'm not going to look at the 1 minute here every second. This market retraces 50% short is still okay, and even if it goes above that level. So I'm not gonna micromanage this trade. The setup is there, the potential for this market is there. The euro dollar is moving higher, which potentially in the short term can move this market lower. All right, so very well. So we reviewed basically most of this. The euro Canadian dollar was anticipating a bounce there, but this market is weak. And it's kind of we knew that, we know that there is an element of sideways possibility of continuation sideways in this market, but this market eventually will rebound as well, and the point is that it's not been very technical lately. You will remember at the beginning of the year we actually traded a short here, which was this 156, which never went into this 150.75. Sorry, we considered a short, but we actually took the short on the Australian dollar, the euro Australian dollar actually, which is on the other hand much bearish, and this market is pushing into 150.110. Make no mistake, we're going to see the market there eventually. And any other markets you want me to review? Otherwise, I will continue my my analysis here, as I do always. Australian dollar, US dollar, as mentioned, this market could be correcting at the moment. It's not very technical, so when the markets are not technical, I kind of leave them alone for a little bit and just let them, digest. I don't want to use other methods. I try to be very consistent, and I will just leave the leave the market move. Okay, and whenever they're ready for for the next measure move, the market will let us know that. So there's no doubt about that. There's nothing to lose. The pound versus Japanese yen also has reached a target there, and let's look at this market on the larger time frame. Let's see what's going on there. Let's see the pound versus Japanese yen. Here we go. And you remember that I mentioned a level of support. That was the 156.40. And then market traded. I know that some of you have taken that trade. And some of you also using these levels for confidence building. And that's very important too. So this is a long, it's not a short. Alpha saying, any predictions for these days or next week? Of course I don't do predictions, and of course I understand the context in which you're using that term. The prediction is no specific predictions beside what the market is telling us. I think a lot happened here, so I would just, if I can have a prediction, is a continued move lower in US dollar Japanese yen. If that doesn't happen, it may be even better in a way, because it means that we can get higher prices for a short in US dollar Japanese yen. But generally, I would say, either a continuation lower for US dollar Japanese yen into 110, or the break of this setup and a move higher into that 116.34, or possibly above that area here, or possibly even within 16.34, which seems very aggressive at the moment. But anything can happen. So I don't see, we need to see these markets set up, and what I predict here is that if we continue lower the US dollar Japanese yen, and we get into that 110, it's possible then for the US dollar Japanese yen to correct higher, and the euro dollar will be much higher, and then correct laterally. And so at some point, the US dollar Japanese yen will correct higher and get into that next area of potential resistance, which we're going to short, of course. And at the same time, the euro dollar will defend this level here and maybe move higher and then move laterally as US dollar Japanese yen corrects. So that would be, I don't know, Alpha, if that is satisfying there, but that's what I would say on these specific markets. Other markets here, they are still kind of completing their move or setting up, and so we don't have a lot to say. Euro dollar is already higher than a few days ago. Yep. Yes, and we made that call. I don't know if you were here before. That's one of the two levels we indicated, and they are recorded also in the reviews well before the fact. Okay, we have indicated two levels. One was the level before the fact, 4 days before the fact, 1, 2, 3, 4. The fifth day, the level was tested. The fifth and the sixth day, two tests with a Furious trade, and then that level didn't hold, and we had that other level that was known now 1, 2, 3, 6, 7, 8 days before. So when you know these levels and you know how to apply the timing, you can actually enter these levels with a very small risk, and once you have a Furious trade, you can just let this market move. That was the same approach I had with US dollar, Canadian dollar before I was stopped out, and I was stopped out at break even here. And that's the power of having Furious trades, because once you have Furious trades, the only cost that you pay are the cost of trading each other: swap, spread, slippage, transaction cost if you have them. Some people only pay transactions costs as a spread. I don't believe that is necessarily the best way to go, but some people, prefer doing that. All right, so I see more people and also new names coming in. Thanks for joining. This is the FibStalker and FS Street Tokyo open trading room. We featured real trading, and in fact, I don't know if you saw that, but we traded the US dollar Japanese yen short. We did that, and we are waiting for this market to continue lower now into possibly 111, 112, sorry. This market has the potential to move all the way into that level in the coming days, maybe even tomorrow, or on Monday, or on Sunday evening, Monday. And this market has the potential now to continue lower. We took a 36 pips risk short, and we're waiting for a Furious trade. If we get the Furious trade there, we'll just forget about this trade, and we'll try to bring this trade into 110, and that's the final targets if this trade works. So I see there Rudogan, Mark S, and we have the usual suspects: Jax, Sinatra, Roland, Jake, Pantelis. But I suppose there are many others that I cannot see. In fact, I can see people like alpha is there as well, but it doesn't show up on my list. So maybe I should refresh my window here. I never understand why some of the names appear and some other do not. Maybe I just have to refresh that. So yeah, I mean, this market has the potential here to continue lower. So any other prediction for this week? Mind also that we are ending into the end of the week. So sometimes we get a good day to you, Mark. Sometimes we get opportunity right at the closure of the European session on Friday, and those are opportunities that then continue throughout the week. No, the list. I mean, what I meant was the chat list here, but I also have a newsletter. So if you want to subscribe for free, there are a lot of information that I give away for free, and a lot of you can go to this blog and subscribe on the left on the left top left side. There is there is there is a link, and you will get also the last 6 issues. And there are also a couple of videos. There is also the video, if you missed that, the video of the New York Trade Expo. So we see here timing check. We see here the US dollar Japanese yen pushing lower, of course, and second data on following live analysis. Welcome, Alpha. Then happy to have you here. If you find it interesting and useful, please tweet about it, and let's make it grow so that we can maintain this room. And I hope this is useful. I mean, you will find real setups. There is also a risk disclaimer. Make sure that you watch also the recording and get the risk disclaimer at the very beginning. For the remaining of the week, then there is not really anything more to add here. If you got a free trade, you should be pretty much okay. Even if you get gaps, those gaps really, are very gaps in currencies, can be managed at the Sunday open. So it's not difficult to do the, what is called disaster recovery on those kind of situations. Now the dollar index here, as you can see, this is the dollar futures on the ICE US exchange, has traded at 97.60, and there is the potential for this market now to be pushed all the way into 94.31. What would that mean for the euro dollar? What would that mean for the euro dollar? Going above these highs and possibly get into that first target. All right. So keep that scenario in mind here. The SP 500 is being pushed higher. I've read a nice analysis from Peter Schiff. As you know, Peter Schiff is very bearish about the U.S. economy for a reason, and I believe it's very what he says is very well disciplined and actually very well explains. There are real reasons there. This market is being pushed higher by this extension here and has the potential to continue higher. And one of the points that Peter Schiff says is, if the dollar is busted, and I know that a lot of people don't want to hear that, but that's the reality of it, because China last year for the first time went net negative in selling bonds. So we cannot just live under our glass and just forget everything else. That's something that you have to keep in mind. So if that's the case, the Fed will not be able to save everyone and everything. They might save the stock market or the mortgage market, again, if they want, the housing market. But then, what about the bond market, which is the one that has the biggest travel and directly related to the value of the dollar? So clearly, you can see also from the charts that the dollar is not bullish, right? Is the dollar bullish really? I mean, on the daily, this is a very small time frame here. Okay, let's look at the larger time frame. Is this bullish? If you think that this is bullish, you should then go to the larger time frame and look at the weekly. And now you start putting things in perspective. This is not bullish at all, guys. Make no mistake, right? And we have a daily setup pushing this price lower. I know that, this is always very difficult, that it's hard to face the reality of the fact, but we are traders, guys. We need to be objective. And this is not good news, but it is the news that we have. So we have to live with it. Okay. So I don't mean to get mean or negative here, but we are traders. So if we do not objectively observe what's going on, we'll never be successful. And that's what the chart is saying here, is telling here about the dollar index. So the dollar index back at 94, which is going to be a level of support, by the way, just been tested a number of times, might mean the euro dollar up into that 150, sorry, what I'm saying, 115.75 level. Okay, so that's the case for this trade here. That's very visible, clearly visible on, and this market might offer further opportunities as well. Let's review very quickly the gold versus silver here and see what's going on. Silver, it's correcting, and it actually tested, as I mentioned, there was a possibility. I mentioned that yesterday, that this market could retest 15 on 08, which is an extension long. So this market is still in long, and gold is still in long as well. Gold, as you can see, it's relatively stronger than silver. And you would not expect that, considering the ratio between gold and silver. And that ratio should go down. So silver should actually appreciate against gold. Is that going to happen? We will see. We cannot trade based on this consideration. We have to trade based on levels and based on trading plans, solid trading plans that can actually be traded. All right. So let me add here, we review the dollar index, the S&P 500, and also gold and silver very quickly here. All right. If you don't have any other questions, I see that no questions are coming over. What I would do, I would start a recap of this session right now. And so what we did, first of all, I mentioned my failure here, but I don't call it a failure. I call it a price failure, because I entered long this market on weekly support around these levels with a stop below lows, 2 risk-free trades. I was ready to bring this price to 158. The market did not agree with me, broke the back of the weekly longs. There is no more long for this market. In a way, I'm happy about this, because this make the market, this will make this market, align this market with the euro dollar and the US dollar, Japanese yen, and so on. Okay, so this is not necessarily bad news, because there will be the euro dollar as well that will offer potential for a swing trade that we lost with the US dollar Canadian dollar position. So euro dollar actually one of the levels that we mentioned well in advance. I showed you that we mentioned this level with 8 days in advance, 110.60, and then we never blindly buy these levels. We always time these levels using the FibStalker timing technique, which is a proprietary technique. If you're interested, you can actually, I suggest you join the coaching program. I have a session starting in May, so if you want to come in, you can take advantage of the offer that that FX Street is giving. If you look at above the screen, above the video, there is a little box you can link. You can click there and get more information. Right. There is also coming from Pantelis. Hopefully, US will keep reporting their inflation, the true one, which is way above the 2%. To all others, as they are still having the global exchange currency, that will never happen. Pantelis, forget it. The inflation in US is much higher than the one being reported, and that's my personal opinion. All right. So then after that, we reviewed US dollar, Japanese yen, and as we reviewed this market, we encountered an opportunity to trade a short. This market is trading at 50% level, the 112, 113 here area, and we timed this market, and this market is now correcting laterally at lows, which is to me a potential possibility for a continuation lower once that consolidation is completed here. Okay. And as this market breaks the lows, it will continue lower and possibly offer us a risk-free trade here. We have a trade with a stop above highs, and we believe that this market is going to move into 112 before anything else can happen. Okay, and after that, we reviewed the pound versus US dollar. We mentioned the fact that this market reached weekly targets, not daily, but weekly targets. And so it is very, very dangerous to short this market at this stage, because at this stage, as you can see, second day of profit taking here, this market could move higher. We will need to see whether the next extension is going to come into place. So if you want to know that level, join me on Sunday, and I'll provide you with that level as well. All right. We then reviewed the lateral move in the Australian dollar, Japanese yen. We mentioned that this market was to move laterally between 80 and 82. Go back and review the levels and the reviews that I gave in the previous days, and we had these two levels trading now twice, 3 times the short, 4 times the short, and 2 times the longs here. I have a long bias in this market because the weekly long have traded before. And we spoke about the beautiful setup we had with New Zealand dollar, US dollar, Japanese yen. The New Zealand dollar, US dollar, and we had the possibility to bring this market into 0.6845. Okay, and this might happen at the beginning of next week. And finally, we reviewed the dollar index very, very quickly. The dollar index, we explained the case of the dollar index retesting the 94, and we have the setup now, retesting the 93.50, 94.50, and this will correspond possibly with euro dollar getting into that first target. And then we mentioned the SP 500 is still pushing higher at this stage in extension, but it's also testing this the 1952 level here. This could be a strong level short, and we will see whether this market will roll over or not. If not, this market is going to move into 1966 and eventually 2000s. And then we mentioned silver and gold, which are still trading on top of extension. So this is it for today. I hope you enjoyed this review. I hope that this is useful for your trading. I'm learning that a lot of attendants actually use successfully these levels. They take trades. They wait to take their profits as well. They wait these important levels, and we will see where these levels are going to move. I'd like to share my chart and indicators. If are you interested, you can check it out. Looks like it's profitable. Thanks, Alpha, for your link there. People can go and review that. But in this room, we only featured the 2 methods, the FibStalker methods and the continuation style. We tend to be consistent, not to mix signals with other systems. So thanks for sharing. And this is it for this week. So I'll hope to see you on Sunday. Sunday we are going to make a full review of the markets and give more setups. And we're going to do those predictions, alpha. If you're interested, you can join us. All right. Thank you very much, and have a great one then. I'll see you on Sunday. Have a great weekend and a great day, good evening, and great day tomorrow or today if you are in Australia. All right. Thanks a lot, and have a good one. Bye-bye now.